So let's start off with the first topic, which is the higher time frame. Now all the heavy lifting comes down to two factors: stacking probabilities and good risk management. Why? Because nothing is 100%. So the goal is to keep it simple and don't overcomplicate it. Analysis paralysis is a real thing. Higher time frame bias is the foundation to profitability. So everything falls into place once you are aligned with the higher time frame institutional order flow. And a very old saying in the trading world goes, the trend is your friend, and that is very, very true. Right, so we're going to be talking about higher time frame, and we start off with monthly to weekly to daily. So when we start off on the monthly chart, if the monthly chart is clear, then the weekly and the daily chart will be clear as well. If the monthly chart is not clear, then we drop down to the weekly chart, and if the weekly chart is clear, then the daily chart will be clear as well. Now, if the weekly chart is not clear, then we drop down to the daily chart to see if it's clear. If the daily chart is not clear, then we simply just stay out until the daily chart is clear. Now, what are we going to be focusing on? We're going to focus on 4 topics here. We're going to be talking about premium and discount, which is the dealing range you're working with. Then we're going to be talking about external and internal range liquidity. And you can check YouTube if you have not seen the video. It's on the MMXM Traders YouTube. Then thirdly, we'll be talking about higher time frame SMT. And fourth, we're going to be talking about the change in the state of delivery and or a market structure shift. So this is our higher time frame protocol, right? For a bullish scenario, we want to have a bullish draw on liquidity. Then always mark out your premium and discount of the range, right? We want to be in discount of that range. Then look for a internal range liquidity pool for our draw to go higher into a external range liquidity pool. Inside that internal range, in discount, we need to see SMT form. This is very important. Now, on that swing low, right, in that discount level, we want to see it wick below, and then the body close inside of that previous candle. And for a bearish scenario, we want to have a bearish draw on liquidity. We want to be selling in premium, so always mark out your premium and discount of the range. Then we want to hit that internal range liquidity pool to target that external range liquidity pool. And inside that internal range premium level, we want to see SMT form. Now, also with that swing high formed, we want to see that candle wick above that previous candle and then close inside of that previous candle's range. Now over here we've got a crude depiction of a chart. We've got the line chart over here. What is important? Like firstly we talk about, right, the premium and discount of the range. We've got a higher time frame old high or fair value gap here and a higher time frame old low or fair value gap there. Now we wait for price to come back into discount if we want to be a buyer. And what is going to be key is the SMT that forms within that internal or external range liquidity. It can be formed either on this low or on this low, but it is key that there is SMT formed on that higher time frame key level for the change in the state of delivery and that market structure shift. If there is no SMT, there is no opportunity. Same thing over here. We've got a bearish schematic, right? A higher time frame old high or a fair value gap, which is either internal or external range liquidity. So if price hits that, we want to see that SMT form within that key level. It's either on this high or after we go into sell side of the curve. And the SMT that forms after we hit that higher time frame key level is key for that market structure shift, and that makes it way more high probable. Right, so we got a GBP USD monthly chart. So we start off with the monthly on the higher time frame, right? From monthly to weekly to daily. So let's see what is happening over here. First of all, what are we gonna do? We're gonna mark out our premium and discount, right? That's important. We want to know, are we in a premium for sells or are we in a discount for buys? What is happening over here? We have to look for external or internal range liquidity. We've got that fair value gap, so we're in a higher time frame key level, right? Now, in this internal range liquidity pool, we want to see a rate on external. We've got a swing high over here, and then we can actually see this monthly candle rates this external range liquidity. Now, after external range liquidity, what are we going to be looking for? got a little eye over here. That is internal range liquidity, right? So if we map out that fair value gap, that is going to be the draw on liquidity after we take out that external range liquidity. We started on the monthly, now we're going to drop down into the weekly chart. So what is happening over here, right? We've got that monthly external range rate over here. We've got that draw on liquidity, which is the monthly fair value gap. Now what are we going to be waiting for? SMT, right? The SMT will be key to see when that change in the state of delivery happens or that market structure shift. You can see over here, we've got this bullish candle rating an old high, and then this is important, the bodies of the bearish candles need to close below that up close candle which rated that external range liquidity. Now this is a high probability order block. Why? Because we took out external range liquidity, right? So we soup the high, and the SMT confirms that this will be high probability. We've got a weekly fair value gap over here, right? So we have a POI once we trade below this bullish candle, so the change in the state of delivery has happened. Now we want to find an entry point, right? Where are we going to be looking for sells that will be in an imbalance which has been created after we closed below that change in the state of delivery candle. So now we have our monthly, we know what our weekly looks like. Then we dive into the daily time frame. Where are we going to be looking for those opportunities? Again, change in the state of delivery, right? We run an old high, the SMT confirms it to be high probability. Then we see a break in market structure down here. And again, go back to that weekly chart, right? The weekly fair value gap, remember. So how do we map that out? We know the change in the state of delivery happened on the weekly, which is this move down over here. We left that weekly fair value gap, that internal range liquidity pool. Now, where are we going to be focusing on for our trades? We want to see if we can get in this internal range liquidity, which is also premium of the dealing range. So we've got a GBP-CAD monthly chart. We're going to do exactly the same as we did with the last chart. We start off with the monthly time frame, right? Then we dive into the weekly, and then we go to the daily to see where the opportunities lie. Now, what do we have over here? Premium discount, first of all. Very important. We want to know if we are in discount or in premium. Focus on that internal to external and external to internal, right? So where did we rate external liquidity? We've got this high here on the monthly, this swing high. We can see price soups above it and then starts to decline afterwards. Now after, again, external range liquidity, we want to be focusing on an internal range liquidity pool. So where do we have that? We've got a little gap over here, right? So that is the draw on liquidity after we take out that external range liquidity on the monthly. And there you have that little fair value gap over here, which is the draw on liquidity. We started off with the monthly and we're diving into the daily right now to get a little bit of a clearer picture. We've got that monthly external range and we've got that monthly internal range, which is the draw on liquidity. And also notice how we have some clean lows here, right? Just at the monthly fair value gap, which is also a nice target to be going for. Mark out your premium and discount as always. So we want to wait after that market structure shift or change in the state of delivery that we're going to go back into premium and then look for important SMT, right? That SMT confirms that market structure shift or change in the state of delivery. So we'll mark out the SMT right now. We've got SMT on these highs. So once we start to close below those up close candles, we can assume price wants to decline lower and lower into that internal range liquidity pool. Now we have confirmed that the market structure shift or change in the state of delivery is high probability. Where are we going to be looking for an opportunity? After that SMT formed on these highs here, right, we have a daily fair value gap left behind. So immediately your eye should go for that liquidity pool to continue down its trend lower. Now over here we've got a higher time frame chart, which is GBP-CAD weekly chart. We can clearly see higher time frame is bullish, right? This is a nice uptrend. Now what makes it a higher probability that we're gonna continue up higher? As always, SMT, right? SMT is very important in continuation or reversals. Now after that SMT has formed, we're gonna be looking again for premium and discount. Step number one, right? We can see this low until this high is our current dealing range, and we want to be a buyer once price hits discount. So zooming in a little bit over here, right? Once price comes back into discount, we also run a swing low, which is here, right down here, run that low, and then it starts to trade up higher again. We've got that external range liquidity up here. So what are we going to be focusing on? So on the weekly chart, we ran that low into discount, right? And now we're going to go into the daily time frame to see if we can form some SMT to confirm that market structure shift, right? We've got SMT on this low down here, swing high up here. Now, because we had SMT on these lows, once we break above it, this market structure shift is higher probability. And after we had that market structure shift, we've got a change in the state of delivery as well. We've got a bullish order block formed, and you can actually see once we break structure here, you can see price dips into that order block, right? The wick is also part of this order block, as well as the body, and we can see price dips back into that order block and continues its path up higher. So we've got that weekly chart on GBP CAD again, right? Remember, swing low, ran into discount, important. We want to be hitting discount before we move up. Discount and premium levels. What are we going to be focusing on afterwards? That internal range liquidity pool, right? So price comes back into this internal range liquidity pool over here. And then what are we going to be focusing on after we hit internal range? That SMT again, right? That confirms that is most likely a high probability area where price will be reversing from. So we hit that internal range liquidity. Once you hit internal, you want to focus on external afterwards, which is this old high up here and these highs up here, right? So let's dive in a little bit deeper. We've got the daily chart over here. Again, that SMT is key, right? So what can we see in this little piece of price action over here? So we hit that weekly discount internal range fair value gap first, right? And see what happens over here. We have a stop hunt within that discount internal range fair value gap, which is on the weekly, right? And then we see price move up. Break of structure happens over here after that stop hunt. And again, the SMT is key here, right? We want to have that with us. Now price starts to trade up higher again, and we've got a fair value gap formed, high probability fair value gap with an order block here. And then price taps that fair value gap and continues its path up into external range liquidity. So here we have another example, right? GBP CAD weekly chart. What are we going to be waiting for? External or internal range, right? We've got a external range liquidity rate, right? Because we have one higher, one lower, one higher. So we have a swing low here. That low gets rated. And what are we going to be focusing on afterwards? Internal range liquidity, right? We have that fair value gap here on the weekly chart. Now let's dive into the daily chart. As always, what is important? SMT, right? So where does the SMT form? We've got SMT on these lows. So after that rate on external range liquidity and key, right? That SMT forming on that low, we can now look for buys towards that internal range liquidity pool on the weekly chart. So on the daily, there's also a swing high. So that's technically also external on the daily, but we're focusing on that weekly internal range. Now, after this SMT happened and the external rate liquidity, we have a order block formed, which is a change in the state of delivery. You can see price dips back into it after it closed above it and then continues up into that internal range liquidity pool, which is the weekly fair value gap. So now we're going to be talking about DXY. We've got a monthly chart over here, right? Step number one, as always, mark out premium and discount. Where are we coming from and where are we most likely to go? Right? So we're focusing on the most recent monthly expansion, which is over here. We hit a monthly fair value gap, right? Let's go to the next slide. We've got a daily time frame over here. So we're focusing on this most recent monthly expansion, right? So what are we gonna do once we hit a higher time frame key level? We are actually gonna be using the bonds triad. So when DXY hits a higher time frame key level, we're going to be looking for that higher time frame SMT between the bonds triad. The DXY and bonds are opposing assets. So I've got the symbols over here for the 30-year, 10-year and the 5-year bonds. And interest rates are the foundation to movement in the dollar-based markets. So we've got the ZB1 chart over here, the monthly chart. We've got an internal range liquidity pool over here where price traded back into. If we go to the daily time frame, right, this is that low on DXY, right, 28th of December. We've got that monthly premium fair value gap. We can actually see the bonds are trading lower at this point in time. So that makes the dollar trade higher, right? But now, important, we're going to be looking for that high probability smart money reversal, which should be accompanied with SMT. So again, this low, right, which we just saw on the previous slide, was the high on the bonds. We've got a market maker buy model going on. And then if we look at the triad, right, the 10-year, 15-year, the 10-year, 30-year, and the 5-year, we've got that monthly fair value gap, right? Again, this is where the low formed and hit a key level on DXY. And we can see this high does not get taken out on this chart, but we do take out the same high on the 10-year here, and we take out the high on the 5-year. So this makes the higher time frame macro even more high probability.